Bitcoin and the wider cryptocurrency market have experienced a volatile few weeks as US government shutdown fears and other macroeconomic events roiled investor sentiment, only for that optimism to return, with Washington set to reopen. At the same time, institutional interest in digital assets is booming, with publicly traded companies increasingly piling into crypto. Stablecoins also remain in the spotlight, especially at this year's Singapore FinTech Festival. Well, with more on how the developments will reshape global financial flows, CNA's Elizabeth Neo joins us now. Liz?
Yeah, thanks for that, Paul. And indeed, developments in the past year have really paved the way for these digital assets to be integrated into payments, settlements, and even corporate treasury operations at an unprecedented scale. And so, for a look at the next decade of crypto innovation, I spoke earlier with Richard Teng. He is the CEO of Binance. Here's a listen.
If you look at any asset class, you go through different bouts of volatility, consolidation, and we are not immune from the broader economic environment, right? So if you look at what's happening in the last few weeks, firstly, there was escalation of trade tariffs and war, rare earth restrictions in terms of export from China for a while, but all those seems to be resolved. There's a US governmental shutdown. There's discussion whether there's going to be further rate cuts in December, and we know that further rate cuts are always good for risky assets, such as crypto, etc. So we have to see how it pans out. But all this volatility and consolidation is not unusual for any asset class.
So the rate cuts you're talking about, how closely does Binance monitor central bank decisions when assessing market trends? And what signals do you consider most critical?
Well, at the end of the day, we are a price taker to all these broader economic factors, right? So we have to monitor how they're coming through, how the investors and traders behave in terms of their asset allocation across different asset classes, right? But we remain very bullish for the longer term because the momentum and the foundation are extremely strong. In the last 2 years especially, you see huge institutionalization, mainstreaming of the crypto sector. Last year, with the introduction of ETF, and then the different corporates and institutions jumping on the bandwagon to really embrace and support crypto. And for the longest time, they're saying that this is scammy, this is a go away, it's a passing fad, but now it's here to stay. So last year and this year, we saw a lot of institutional adoption, a lot of institutional allocation, and this year we saw digital asset treasuries coming through, the different treasuries trying to do allocation. But it's not only the corporates now, it's the foundations, the family office, and even the sovereigns setting up their strategic asset reserve to invest into crypto.
So that mention of digital asset treasury companies, coming in, and in fact, I think it's more than, or rather tripled. We're seeing the number of publicly traded companies investing in cryptos. So what does this indicate to you about institutional adoption of crypto? And if we've got so many of these DATs turning to smaller, less liquid tokens, then, what is the risk there? Is there a risk there? And how does Binance view this?
Well, so just on our front, we see record numbers of institutions being onboarded onto our platform, right? So even the traditional trading desks that just trade equities, bonds, and commodities, they started to add a trading desk. You see all the different sort of institutions starting to do allocation, and so are corporates, including corporate treasury. So we see all those movements. The difference between DATs and ETF are they are having different structure to allow access to investors to invest, right? ETF are passive form of investments. They try to index against certain cryptocurrency and benchmark their performance against that. Whereas DATs allow for much more active form of investment strategy into crypto, right? So they can do things like staking, some yield enhancement, etc. So it depends on the risk appetite of investors, and they cater to different investors on that asset class. But it's just part of the mainstreaming story for crypto. You'll see more and more of this. You see options being introduced by different players globally. You see different structuring of products. You see institutions now offering or offer their investors crypto exposure as well. SoFi in the US just announced they're going to allow their users on that front. So we support institutions. We just introduced what we call crypto as a service, which is a light white labeling product. Institutions get to keep their customers, they do all the KYC, KYB interfacing, and we settle everything on the back end, allowing them the deepest access into the biggest exchange globally in the crypto sector.
So, this just seems like a natural evolution, and you're pretty bullish. I mean, there are reasons to be, as you talked about. One thing is, of course, the crypto-friendly stance from the U.S. Trump administration. Genius Act, stable coins, that's really supported crypto a lot this year. And with stable coins increasingly, integrated into the payments ecosystem, even settlement, treasury operations as well. How do you see the role of stable coins kind of evolving compared to traditional fiat?
So, to me, President Trump is extremely strategic and visionary to say the US will be the crypto capital of the world and the AI capital of the world, right? Because these are the two foundational technologies that will drive all economic growth for every economic subsector going forward. So that's extremely important. Because of the clarity that's given, I mean, US went from anti-crypto to now extremely pro-crypto. That clarity given through the form of Genius Act, through market structure bill, is now making US a very attractive destination, right? And because of that, stablecoin issuance and usage has just skyrocketed in the first 7 months of the year. So if you look at stablecoin transaction volume, it has tripled in the first 7 months because of those clarity. And those clarity are very important because of what you are seeing. In the US, it's not only the institutions that's going to, the financial, the banks that's going to issue stablecoins. It's all the big e-commerce players because it makes absolute sense for them. If you look at the traditional banking rails that we have today, if you do a cross-border transfer going through correspondent banking model, it takes 2 to 3 days for the recipient to receive the money at very high cost. But if you do it via stablecoin, that asset transfer of value takes place almost instantaneously at a fraction of the cost. So for merchants, for vendors, the capital velocity that can bring about is much higher. They need to keep much less capital. So there's plenty of benefits. So you're going to see the usage coming through very quickly. But they do solve a lot of real-world problems, right? So if you look at in many parts of the world, the financial inclusion is extremely low, less than 20% financial inclusion, meaning 80% of people have no access to financial system, no access to proper domestic and cross-border payment system. Stablecoin for the longest time was the only mode. Crypto was the only mode of transfer of value, and they have been embracing that. So we are seeing that technology being embraced by the mainstream, by institutions, and the pace of growth will be very fast going forward. Because to me, if the financial institutions don't choose not to adopt this, their cost structure will be very high compared to those that have done so, and they'll be left behind. There is going to be a competitive disadvantage for themselves.
Of course, with stablecoins in the picture now, no doubt it lends greater support, greater mainstream adoption of cryptos, really changing the impression of what cryptos can do. And so, we're hearing, some analysts, JP Morgan even, expecting Bitcoin to hit $170,000 USD over the next, say, 6 to 12 months. How realistic is this forecast? And what could hinder or accelerate that growth?
Well, coming from JP Morgan, I think that's a big endorsement for crypto. Until very recently, Jamie Dimon was one of the biggest proponents against crypto, but he has changed his stance now, right? So coming from JP Morgan, I'm sure they have done their fundamental research on that front. But there are different price predictions, 170, 250, I've seen 500,000, I've seen $1 million. I don't have a crystal ball to predict that, but my view is this, right? We are at 7.5% crypto adoption globally. The momentum and the foundation are extremely strong. Many people are adopting this and building on this. So the long-term view and the long-term prospects are extremely good. And the adoption curve is going to sharpen a lot more. We started 2024 with 170 million customers on Binance. Today we're close to 300 million. So if you think about it, it took us about 6.5 years to reach 170 million and 1.5 years to to bring in another 130 million customers. So that curve, you can see the pace of adoption. And what's unique also is also a lot of institutions, a lot of corporates are now embracing this, which makes for a much broader and deeper marketplace. So the marketplace is more sustainable, healthier at this point in time than in the past. So the prospects are very bright.
And that was CNA's Elizabeth Neo from the Singapore FinTech Festival.